Hello everyone, and thank you for being with us. My name is Tom and I'll be moderating this evening's presentation. As I believe you're all aware, we recently announced a very exciting addition to our team of analysts, Carolyn Boroden. Carolyn is a renowned technical analyst and author of Fibonacci Trading, How to Master the Time and Price Advantage, which was published by McGraw-Hill in 2008. Carolyn has been involved in the trading industry since 1978, starting on the floor of the Chicago Mercantile Exchange. And many of you may have seen her work featured on the Off the Charts segment of CNBC's Mad Money with Jim Cramer. Carolyn will be offering a service inside ElliottWaveTrader.net starting in early December, and we'll be releasing details of that service and pricing very soon. But in preparation for that launch, Carolyn has been generously sharing analysis on ElliottWaveTrader, and tonight she's going to introduce us to her method in even more detail, showcasing how she uses Fibonacci ratios on both price and the time axis to identify key support and resistance regions with the goal of isolating relatively low risk and high probability trade setups. So without further ado, please allow me to welcome the maven of Fibonacci trading, Carolyn Boroden. Carolyn, thank you so much for being here.
Thanks for having me. All right, so we'll have actually double recordings. So I believe you have this recorded. I am also going to record it on Camtasia just in case. So we'll have a backup. But today what I want to do is I want to help you have a background on, what my method is, but then also how to use it. Because, if you look at the charts and you have no idea what to do with them, that's what I want to share also by the end of this presentation. So let's get started. And I'm going to ask you how 4 points on a chart would give you this particular low. And of course, nobody's really supposed to have the answer to the question, because I'm going to show you that taking, let's see, it's going to be this low, this high, this low, and this high, called this low. So let's take a look at the next slide. This is actually a 30-minute chart in IBB. And first, what we had was a retracement of low to the high. 618 came in at this 104.56 area. So that's one price relationship. And then on the same chart, I also ran an extension of this prior low to high. And we had the 1618 extension that came in at 104.54, very close to where the other price relationship was. And then this is the same 30-minute chart, and there's yet a third price relationship that comes from taking 100% of this first swing down, projecting it from the lower high, and that gave us 104.53, okay? These swings were very similar because the first decline was 205 and the other decline was 201. So I would call this symmetry because symmetry, the definition is either similarity or equality when comparing swings in the same direction. And in this case, it was similarity because 205 is pretty similar to 201. So you end up having 3 price relationships from 4 points on the chart that came in at this 104.53 to 56 area. Actual low was made just a penny above 104.57, and it included a 618 retracement of one swing, a 1618 of another, and a 100% projection of another. That's what I call a trade setup, okay? I do 3 different types of trade setups, okay? I do symmetry setups, which a symmetry projection by itself is a setup. That's the only one where you don't have to have multiple price relationships that come together. Then there's Fibonacci price clusters, which is the coincidence of 3 or more Fibonacci price relationships that come together within a relatively tight range. And then I also do a 2-step pattern, but it's not going to be exactly the same, I guess, as maybe that you would look at it in Elliott Wave, because I have some very specific ratios that I want to see before I would put something out for that pattern. Okay, so it's not going to be the exact same thing. All right, let's take a look at why would you want to use this type of Fibonacci analysis. So that was just an example just to show you how it can work. But now I want to go to the basics and show you exactly what I use. But why we want to use this type of work is because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. This works on any time frame and essentially any good market data. Now, the only types of charts that I can't really analyze is, you know, something that doesn't really have much back data, or you know, new stock where there's no data. You know, it's just not going to work. But there are so many charts that do have good data. We don't have to worry about not being able to use this. I've applied this work to stocks, ETFs, futures, and the Forex markets, and it works on all of them. It's an excellent methodology to use with option strategies. I'm not sure how many of you trade options, but that's what most of my traders use. And then you can see things in the market that you will never ever see just using indicators alone. Okay, because this will paint a picture. It's almost like having, you know, invisible support and resistance. But as long as you run these levels, you will have the decisions that you need to trade against. I don't think I want to spend too much time on the Fibonacci numbers, but, you know, this is the basic number series where, you know, you multiply, let's say 13 by 1618, you're going to get 21. So basically inside of this number series is the golden ratio, or 618. So I don't actually use these numbers. I use the ratios derived from the number series. So 618 being the main ratio, but I also use 382, 50%, 618, 786, 100%, 1272, and 1618. Occasionally, if it's, you know, a huge swing, I'll look at 236. I use 2618 for my third targets for any trend trade setup. Every once in a while, I might run 4.236, but not that often. That's just if there's some crazy extended move and I want to see where it might terminate. All right, let's look at, you know, 618, or the golden ratio, comes from inside of the number series. Okay, it's basically the ratio in between the numbers. But what about the other ratios that I'm going to use? Well, they are all related mathematically. So, you know, here's where you get 382. Square root of 618 is 786. I use that. Square root of 1618 is 1272. And then, fun fact, it's also the base to the height of the Pyramid of Giza. And, you know, and you can see how all of these numbers are actually related to each other. All right, so I use 3 different types of price relationships to run my price work. I use retracements, I use extensions, and I use projections. So let's go over each of those, and hopefully this will give you a better understanding of what I'm trying to do every single day. Here, for potential support, I'm going to run prior low to high swings and retrace using 382, 50%, 618, and 786 for possible support. Or I'm going to take any high to low swing and use those same ratios to look for possible resistance. So here's a couple of examples of that. This is a daily chart in square. And in this case, here's the low to the high that I measured, and, you know, put all these retracements in there, but there was only one that really had any kind of movement. And some of you will say, well, how do you know which one to trade against? Well, this is not a method that I typically use. I don't use single levels. Okay, so what I'm going to be looking for, and that you'll see by the end of this presentation, is that I look for clusters, and the clusters identify the more important areas of support and resistance. And that, along with what I'd like to call a trade trigger, is what you use to make money with this work. So in this case, you only got a reaction off the 618 retracement. Here's another example. This is a 30-minute chart of AMAT. This is measuring a prior high to low swing and running the retracements. No reaction, minor reaction, minor reaction, big reaction. Again, you know, we don't know which of these levels are going to hold. That's why we either use a trigger or we wait for the clustering effect. That's an example of retracements in AMAT. We'll move on to price extensions. So a Fibonacci price extension is essentially a retracement beyond 100%. And in the way that you're using only 2 points to run retracements, you're only using 2 points to run extensions. So I'll take a prior low to high swing and extend downwards using 1272 and 1618 to look for possible support. Or I'll take a prior high to low swing and extend upwards 1272 and 1618 and look for possible resistance. So here's some examples of extensions. And one of the things that I say every single day is many moves tend to terminate at extensions of prior swings. Okay, that's typically where my first target for any trend trade is always the 1272 extension. And hey, it's great if it blows through that and goes to the 1618, but you're going to see more often than not, you are going to see failures around extensions. So this is a daily chart of Facebook. And this shows you an example of this prior high to low, running the 1272 and the 1618 extension. Well, the 1272 extension did have 2 failures against it. We didn't see anything against the 1618, but you can see that we did have the reactions off of the 1272. And on the same chart, I measured this high to this low. We didn't really have any reaction at the 1272, but we did at the 1618. And this was, you know, pretty healthy pullback. So that's one of the reasons why I always tell my traders to ratchet up stops when you're up at extensions of prior swings. Let's look at another example. This is a daily chart of Intel. This is where I took a prior high to low swing and ran the extensions 1272, 1618. No reaction here, but put in the high here. Okay, so you know it's not always going to work, but when it does cluster together with some other price relationships, and also if you get some timing that comes in at the same time, it's definitely going to be worth looking at. Okay, here's another example of an extension. Now this is a weekly chart of CMG, okay? And this was going down for quite some time. So I was trying to look for an area where it might terminate the decline. And the 1272 really only stalled, you know, for a minute, but the actual low was made, it looks like at 263, and the actual extension of this major swing, which was 146 bucks, came in at 262.71. Close enough. But you know when you're getting into the area of these extensions that you have to watch for a possible termination of the move. So that's extensions, okay? Now, the third type of price relationship that I'm going to use on the chart is what I like to call Fibonacci price projection. Now, the only issue with this is that some of the programs that are out there call this the extension tool. The tool that allows you to choose 3 points is the extension tool, which gets confusing. But bottom line, it doesn't matter what you call it. It matters that you're comparing swings in the same direction using 3 points, okay? So here is where I would look at a low to high and project it from another low using 100% and sometimes 1618. Or I'm going to take a prior high to low swing and then project down from the next high and look at 100% and 1618 for possible support. So here's a couple of examples of price projections. And this is a daily chart of crude. It's a relatively old example, but in this case, I wanted to show you at least the one symmetry decision that is real obvious on this chart. With this prior high to low was $3.12, projected from this high. Okay, that gave us 55.87, and the actual low was made at 55.88. So these two swings were similar. This is a perfect example of symmetry. Okay, and if you actually look at some of these other swings, you'll see that a lot of the others were also similar. You know, this was 350, this was 357, this was 333. You know, all $3 around that $3 area. So actually, let me go back to that one. So when you have a symmetry projection in the direction of the trend, which it's pretty obvious that this is a bullish pattern of higher highs and higher lows, you can use one single level for a trade entry. Okay, and you can also do that on futures. It happens every single day. But bottom line is, you know to look for or anticipate possible support. And if it triggers an entry, you take the trade and, you know, stay with it until you get stopped out. So that's crude. This next example, it's probably one of my oldest examples because this was the S&P, the big contract way back when. This was on a 5-minute chart. But these, you know, retracements and extensions, I run them on all time frames. In this case, running the low to the high and projecting from the next low, there was actually no reversal at the 100% projection, but there was a reversal at the 1618. So these are the two I used, 100% and the 1618. And let's take a look at another example. So here's another projection. Again, this is where you're using 3 points to identify these areas. This is where I took a prior low to high swing and projected from another low. Now there would have been, you know, potential resistance here, but we pretty much gapped through it. So the 100% didn't stop the market, but the 1618, 1097, yeah, it wasn't to the tick. It looks like 1097.51, and the actual resistance was 1097.88. Close enough. All right, let's look at one more example of symmetry. So if you're looking at a chart and you can tell that this is, you know, a downtrend, lower lows and lower highs, you're going to want to use the symmetry to help get into the market in the direction of the trend. So in this case, you can see that this prior low to high swing was $4.94. Projected from this low gave you 70.34, and I think there's something wrong on the math here, but you can see that these two swings were similar, and this basically gave you the area for a short in square. Okay. Okay. So my most powerful trade setup is called the Fibonacci price cluster, and the definition is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. So here's a good example of a price cluster, and this is obviously something you can trade off of. So this is a daily chart of Adobe, and I'll show you where I got some of this cluster. Okay, we had a healthy zone between 257.34 to 259.46. We had 3 100% projections. We had a 50% retracement of another swing, and you had a 1272 extension of another swing. Okay, so that's 3, 4, 5 price relationships. But most of it came from comparing prior swings in the same direction, because this prior high to low was $54.87. This high to low was $55.77. This ended up coming in just a little bit less at 53.54. But that was part, you know, of all the projections. And you know that when you trade down into a zone, if it holds, what you do is you go down to a lower time frame chart and you look for a trigger. The trigger is essentially the price action that tells you that it's worth placing a bet against one of these zones. Okay, so how do you trade it? Again, I go back to what I call a trigger to tell us it's worth placing a bet against the cluster zone. So we definitely want to go down to a lower time frame chart, because you'll get triggered relatively close to where your risk definition is if you go down to, you know, the intraday chart, for example. Okay, and I mean, you don't want to wait for, like if you have a setup on the daily chart, you don't want to wait for a daily chart to trigger. I mean, half the move will be over by the time that happens. So again, we go down to a lower time frame chart. This is kind of like the basic trading plan. I actually do have the swing trading plan and the day trading plan copies that I've posted on the site. And once my page gets up, I believe all that information will be stored there. So I can just, you know, direct you to, you know, go and grab the trading plans that you can use with my work, and you can tweak it to make it your own also. And then also there's a guideline sheet that kind of gives you an idea of how to use this work too. But here's the, you know, the general idea is to identify your setup, and I basically run the setups for you. And then, you know, we look for triggers if a zone is respected. So I don't want to go over these in detail because I do have, you know, some other, or the actual trading plans will help you do that. All right, I want to give you an example of a cluster in Apple. Whoops, let's go back to Apple. Now, in this case, you know, I'm running all possible retracements, projections, and extensions. And by doing that, you know, with all the different swing highs and lows on a chart, I'm going to come up with some clusters. In this case, I took this prior decline, that was $12.47. This decline, $13.44, and projected both of those from this high, you know, when we started to pull back, because I wanted to look for a new buy zone. We actually have a zone like this setting up on the daily chart. We're not there yet though. But we have the symmetry. We had an extension of this low to this high swing extended downwards. And I also had a 50% retracement of another swing. So that was the cluster 214.13 to 215.75 that showed up on the daily chart. And typically, if you want to just look at it for a day trade, you can use something like a 1 minute or 2 minute chart for an entry. Okay, I have one of my traders that took a trade in Google that I'll show you later. And he pretty much like got it on a 1 minute chart, but then just didn't take it overnight. Okay, if you're gonna take one of these trades overnight, what I want to see is a 15-minute or a 30-minute buy trigger. Now, I will tell you that the 15-minute chart is more aggressive and it will get stopped out more often than the 30-minute will, but it will get executed closer to where your risk is. So, you know, that's your choice whether you want to use that one or not. But bottom line, we had, you know, it hit, it held, it triggered on multiple time frames. And what was also nice about this particular trade is we were above the 200, above the 50, and the 5 and 13, we're still in a buy mode. Okay, so when you have all of those averages that I use on my daily charts in the, you know, in the right direction, that's going to be a higher probability setup. But we did end up seeing a $35 rally off of that zone that was simply calculated, you know, by these prior swing highs and lows. All right, crude. This is an example from, I don't know, it might have been a month ago. This is just very simply 618 retracement and a symmetry projection. So when I start to see, you know, a new pattern develop, when you take out a prior swing high, I want to look at that next pullback. And in this case, we had a 618 retracement of one swing and 100% of this prior decline that came in at 43.46. 46 was the actual low, and it doesn't look like a whole lot because of the scaling, but the rally was $4.46 off of simple symmetry with the 618. So that's one that I like to look at, you know, especially short-term work for example, in the indexes. All right, I'm also going to show you, I'm sure you've seen some of the charts that have intraday timing, and today I gave you that on the 120-minute chart in the indexes, and it actually held nicely so far. But here, this is an example of where I have timing that's coming together at the same time that we're testing key price support. You know, it was an overall bullish pattern in Amazon, higher highs and higher lows, you know, general pattern. We held support and tested it at the same time that the histogram had timing for a low. So when you have both time and price come together, I mean, it's pretty much a no-brainer. Those are some of the highest probability setups. So in this case, we ended up seeing a $47 rally when your risk would have just been right underneath, either underneath this low. That's one choice for stops. You can place the stop underneath the low that was made prior to your buy signal. Or if you want to give it a little bit more room, then you have the stop underneath the low end of the zone. Okay, but the risk reward is typically very good on these setups unless they're very shallow pullbacks. So let's look at how that would have triggered an entry. Okay, so that was a 30-minute setup. This next chart is a 1-minute chart for a trigger. And you wanted to see basically a shift in pattern from, you know, the lower lows and lower highs over here on the left-hand side to higher highs and higher lows, to consider that, you know, we might have a low in place against that support. Whoops. Let's go back to the right slide here. So then we had, let's see, we took out a prior swing high. That's one of the things I want to see besides the 834 EMA crossover to the upside. So once both of those things occurred, you know, it was time to be a buyer with your initial risk underneath this low or underneath the zone, like I explained. And that ended up being, you know, I mean, this risk, that's the risk pretty much to, you know, that was a pretty healthy rally. All right, let's look at a couple more here. So now this one, I could probably update this slide because I found that, you know, the Symmetry showed up in diamonds a while back where we had similar swings. So this decline was 2026, this was 1982. This ended up being 2006. So I basically took the projections and then ran them from this high here. And the area was tested once, twice, 3 times. And as you know, if you've looked at, you know, a Dow chart, I'm sure that we met multiple extensions on the upside. Let's take a look at, all right, so Disney. Now, Disney was one of the setups that I had shown, you know, in the room. I had posted, you know, a couple of charts on this. But what was the most important thing, again, in this case, was Symmetry. I took a weekly chart in Disney, and I noticed that these prior larger declines looked similar to the current decline at the time. Okay, so I was able to project both of these from this high, project downward 100%. And then I also found a 382 retracement and a 50% retracement that overlapped. So we had a zone from 127.25 to 127.69. 127.54 turned out to be the actual low. And because, you know, the larger trend was still bullish, higher highs and higher lows, we knew that this would be the potential upside target at the 152 area. So this started before earnings, and then I think most of you know the result. We did end up continuing to hold above here. We did not make the 1272 target yet, but I mean, we've had a $23 rally off of this support, which was simply defined by, you know, Symmetry and a couple of retracements. All right, let's see what else I have. This is another example of Symmetry, and this is one that didn't end up following through. This was in Amazon, probably, I don't know, 3 or 4 months ago. And we had swings that were almost equal, 292.40, 292.28, okay? So we knew there was potential support here, but it didn't go to the target, okay? It did rally $110 off of that Symmetry decision, but it didn't make the target. So of course, we don't always make targets, and if you get involved in a trade, you definitely want to trail the stops. Okay, here's another example. This is actually an older chart of Roku, but it shows you this gorgeous Symmetry. So here, if you look at some of these prior declines, let's see, 1887, 1707, 1933, 2098. I basically took all of those declines, projected them from this next high, 92.46 to 96.37 ends up being the support decision. Now this would have not have been a graceful entry because it looks like we gapped up. So it was probably right around earnings. But bottom line, you'll see these patterns in the market all over the place. You'll find the Symmetry. And we ended up seeing a rally of $80 off of simple Symmetry. Here's another example. This was a while back in Baidu, actually, October 30th. Okay, yep. Here you basically had key price support 10037 to 93 is where we had some symmetry plus a couple of other price relationships. But also, you know, we didn't have all the moving averages on the right side. But the reason why I was willing to look at this as a trade was because we had taken out a prior swing high and because we had timing. So when I had 1, 2, 3, 4 cycles that came due between the 29th through the 31st, I was okay looking at buy triggers in Baidu. That rally, that initial rally, it looks like it was 20 bucks. All right, here's another example, and this is an example in Sherwin-Williams, and this was off of a weekly chart. So when the market has really deep corrections and it just looks bearish when you're looking at the daily chart, I like to back it up and see if there is any symmetry on the weekly chart where I have more data where I can compare, you know, the declines with some of the other prior larger declines. And in this case, and this I actually had published, I think, on Real Money, we had a prior decline of $76.08. We had a decline over here of $73. And all I did was then project those two from this high, and that gave us the 359, 362 area as possible support, actual low 362.36, and this decline ended up being 72.79. So, you know, very similar to this one, right? So that's all we basically used. And what did it do? It made 2 targets on the upside or rallied $117.28 before it failed. But the other thing that's really interesting on this chart is that not only did you have similarity in price, you had equality in time, 15 weeks down, 15 weeks down. So you had time and price. All right, let's look at a couple more. Tesla, we had a simple symmetry setup a while back. And again, it's just comparing swings in the same direction. Now I would have also compared, you know, this swing, but I believe we had gone through it. But here you have similar swings with $35.68 versus $35.14. It hit, it held, it triggered, it came back and scared you, but it never took out the low. And, you know, well, and we know that was a $122 rally off of simple symmetry. You can just use symmetry by itself to make money. I prefer to have everything though, you know, all the information that I can have. So that's why I do all the levels all the time. Here's an example of a trigger. So let's see. Oh no, this is, sorry, but this one got mixed up with, okay, this is the one you're supposed to see first. So does anybody remember the TLT setup? Okay, because this was a nice little 2-step pattern into support. I also had timing on the daily chart to support that. And I knew that if this weekly pattern is any good, that we have potential up to 152.83. And that doesn't mean it's going to get there for sure, but you always want to, you know, have targets to shoot for. You also want to watch hurdles on the way up as far as, you know, what might get in the way. But there's that 133.77 and 134.77 area. Actual low 134.45. Okay, and here's the trigger chart. So this is, if you wanted to look at it for swing trade, here's where we took out a prior swing high, and you also had the 834 EMA crossover to the upside. So at that point, you know, you can buy TLT and place a stop underneath this low. You know, if it comes back down underneath that, you get out of the trade. All right. All right, now, I'm going to apologize in advance that I did not get this to you today because honestly, I don't think it makes sense to post a 5-minute chart because by the time that somebody looks at it, it's probably gone. But I did want to share this as an example in crude oil. And this is a 5-minute chart. And if you look at, where it shifted patterns to higher highs and higher lows, all I did here was take this prior high to low, which was 26 cents, project it from this high, gave you the 55.68, and I missed it. I didn't do anything, but it just shows you though how symmetry shows up so often in the market. And when you find it, you can typically place a bet against it. All right, another example. So this one, I'm pretty sure I've been in the room with this setup. We did have Facebook gave us a nice pullback into a cluster that came in from 187.25 to 188.57. Now, what else I liked about Facebook was that you're above the 200, you're above the 50, and as it pulled back, the 5 and 13 were still in a buy mode with the 5 above the 13. So it hit, it held, it triggered, it scared you over here when it pulled back, but we almost met target 1 at the 20069 area. But you have to remember, anytime you get close to extensions, it's a pretty good idea to, just ratchet up your stops a little bit more, along with the fact that I had some timing and time resistance between the 19th through the 22nd. Now, as far as timing is concerned, if the market's trading up into timing, you're going to anticipate a reversal to back down. If we're going down into timing, you're going to anticipate a possible reversal to back up. Okay. If the market's going sideways into timing, forget about it. Then it doesn't have any predictive value at that point. Here is an example of a trigger that you could have used against that setup in Facebook. Okay. So it made the low into that support decision. You shifted from a bearish pattern of lower lows and lower highs to here's where you took out a prior swing high, higher highs and higher lows. So once you both took that out, and you even could have used this little micro swing over here, as far as a reason to take the trade. But once we had both the crossover and we took out a prior swing high, that was your buy signal. And it's not going to go straight up. It's but as long as it holds, the support when it pulls back, you can stay in a trade like that. But that's just a good example of, how you can use a trigger to enter a swing trade against the daily work. All right, let's see. Okay, so this is a good example because it was a bust. You have to show those two. I mean, we have support with symmetry in 618, and you have the overall, bullish pattern. So this was an area to look for a buy entry. And guess what? It did trigger for a short time. And our target would have been 360, 365. But what happened in this case was, when the indexes started breaking down, we came back through this area. So just to give you an example, though, with the setup, so if you would have taken the trade when you had both taken out this prior swing high and you had the moving average crossover, I mean, you just want to get to a break-even stop, as soon as possible. But this didn't follow through when the rest of the market was getting crushed. This got crushed also. So guess what? That's why we use stops. And whoops. Oh, okay. So now I just have a couple of timing examples, and then I think we can probably open it up to questions after that. Now, as far as the timing work, I use the same ratios that I use for the price analysis. So the only difference is that we're comparing highs to highs, lows to lows, lows to highs, and all that. And we're using the time axis of the market. So for example, here's where we had, I like to see at least 3 price relationship or time relationships before I suggest that we might get a reversal. And here you had the high to high, 1618 in time on the 20th of September. You had another high to high, 618 in time on the 18th, and then you also had a low to low, 1272 on the 18th. Okay, and then the actual high was made directly within that zone on the 19th before you had a pretty healthy decline in S&P. Now, we also have the current setup, And I know that, you know, some of this can maybe fit in with the Elliott Wave stuff. And I'm not going to tell you that I know Elliott Wave. I only know the basics. But anytime that I've tried to count something, forget about it. You know, so let me just do the Fibonacci, and you guys can do the Elliott Wave. But here's what we're looking at as far as timing. Now, another thing, though, I want to share is that timing is probably only accurate about 60% of the time when it triggers. Okay, so you anticipate a possible change, but don't make the assumption. Wait for a signal that tells you that it's worth placing a bet. So, for example, I had some really healthy cycles between the 11th through the 13th, but it basically didn't do anything. Okay, it had a micro pullback. Here, we do have a chance for it to, you know, give us more on the downside. And here are some of the reasons. You had this low to high swing that was 32 days up. The current low to high swing, 33 days up. That's time symmetry. Now, if it would have gone beyond that, I would have looked at comparing this rally swing to these swings of 37 and 38 days up. Bottom line, I had the coincidence of, I had two different time windows, the 18th through the 27th, and then the 25th, 26th. And again, you can see there's, you know, more than one cycle. When I start to see some cycles off of some pretty large swings, I definitely want to anticipate a possible intermediate trend change. All right, let's look at, actually, okay, I did have one more chart. So this was what happened today. So just so you understand, if I say, hey, I've got, you know, timing for a low on the 120-minute chart, then that means I'm looking for or anticipating a low. And when I threw it out there, because today I was like clustering as fast as I could because the market was insane, and I do so many charts that it takes a while to, you know, get all of them updated, but I gave you this. So basically, I identify the key highs and lows that I want to use for the timing histogram in the program. I projected from this last high for the next possible low, and this is the low. We also had some key price support. So the way I have to look at it is that if this is a more important low, which I don't know, but if it is, your typical target's going to be the 1272 extension. But because of where we're at with the time and price resistance, I'm still going to watch for possible failures underneath this most recent high. Okay, so those levels I'll be giving you in the video update later. So I think that's the last one. Let me make sure. Oh no, sorry, I forgot about the trigger chart. So this is where you had, this is a 377 tick chart, which most of my futures traders will use that. And here's where we ended up, you know, testing that support and timing. And then here's where you had the moving average crossover, and then you took out the prior swing high here. So at that point, then it was okay to go long S&P, and your risk would have been right underneath this this last low. So now let me make sure for sure that this is my last slide. Yeah, it is. Okay, so that's, hopefully that gives you a little bit of an introduction as far as what I'm doing with the markets. And if you have any questions, I can take them now.
That's fantastic. And everyone, you can use that questions box to submit those. And just as a quick reminder to everyone, we are recording this. So, you know, we can't do a 4-hour seminar right now tonight. So you're going to be able to go back and replay this and go over specific parts again. So just remember that. We'll get that in your hands as soon as possible. You know, Carolyn, I actually wonder if we could start with just maybe just quickly glossing over or touching upon some of the items in terms of what people are seeing on your charts. So sometimes at the bottom, you'll see some notations. Maybe sometimes they might reference W or TB. You know, what are those call outs actually saying?
Okay, well, W, I'll have to see what you're talking about, but TB would be trading bars. That would represent trading bars. Let's see, is there an example of one that has a W on it?
Could it have been week? Was there a weekly chart?
Oh yeah, it might be weekly. Yeah,
okay.
W for weekly.
Okay, so sometimes it might just actually, like what we're seeing now, it might just call out bars. Other times it might say TB, but in that regard, they're the same in terms of they're just counting the bars.
Well, as far as counting the bars, all I have to do is, let's see, click on a low, click on a high. That tells me that that rally swing was 21 bars. So, I mean, the program does that for me. Like that swing was only 9 bars. Let's see what this one is so far. Yeah, this is where we have to watch kind of for, possible failure. We did clear some of the lower resistance, after we, we hit that support and timing. But one of the other things that I didn't mention is taking it from one decision to the next, because I don't want to say that I know exactly what the market's going to do, because I don't. But I did know that we had time and price support, and I knew that it did trigger an entry. But do I know that it's going to go to the 1272 extension? No, I have no idea. So I asked you to take it from one decision to the next. Here was your last buy decision. Here's your next sell decisions. Okay. If you start to see sell triggers when you get into, these areas, you can take that trade and then you can define your risk just above there.
That's perfect.
But if we push through, yeah.
No,
but the other thing, if we do push through, then we do have to consider that we might get a full 1272 extension because of, and let me show you, well, this will be in the update too, but for example, I started scrambling to do some of these other charts. And if you look at this NASDAQ chart, this is a daily chart of NASDAQ. I just started taking all these prior swings and also some from over here and projecting them from the high. So far, this pullback is only similar to prior pullbacks within the uptrend, where in the past you resume the rally. So here's price still above the 200, above the 50, and the 5 and 13 are still in a buy mode. So for me, I'm not going to tell you that I think that I have a major high in place at all, because there's still support. You've got all the moving averages on the right side. And yes, I'll watch for a possible failure because of the timing and because the market is so overextended. But when all the new shorts come in, that's what feeds the next leg up, right? So we want to watch this pretty carefully, because the next decision is the resistance. If you get sell signals, you take a short. But if you just blow through that resistance, we're probably going to go to the 1272 extension on the upside.
And while we're on this chart, just to clarify some of the phrasing that some people are seeing and they have asked about, things like when we're looking at the timing axis, we see the label TCR and also ATP. I don't know.
TCR is time cycle ratio. Robert Miner was my mentor, and he created the program. So TCR is when you have 2 points that you're running on the chart. So in this example, it was a high to high. This is a TCR. Okay. Now the ATP is an alternate time projection. That's where you're taking, let's see, low to a high and projecting from another low. But that's using 3 points. So it's an alternate time projection because, you're alternating the swings.
Very good. That's perfect. So when you are using your retracements and your extensions, do you weigh any one of them more? Do you weigh the retracements more or the extension more, or does anyone, I guess, weigh more in your decision?
If I could only use one thing, I would use Symmetry and just, trade using Symmetry. I mean, I think that's a real powerful part, of a setup. But also, like when you talk about extensions, it depends on, is it just one extension? Because when that happens, yeah, I'm going to look for a possible termination of the move, but I'm not necessarily going to, call for a top and a reason to go counter trend, especially if it's only one level. But if it's a bunch of extensions and there's other price relationships and all that good stuff, and you might even have timing, yeah, then, that could be, important also.
And as your presentation is pointing out, we're looking for lower risk, higher probability setups, and that's what that that clustering, almost like a voting
Yes.
system. The more that you have on your side,
Yep.
at least the more confidence that you're having that this is a low risk, high probability setup.
Yeah, and I never buy breakouts or anything. It's just I'm always setting up, using pullbacks and retracements and extensions and projections.
That's perfect. In terms of when using in the 1.272 and the 1.618, do you just, even if it's anecdotal, do you take it more as a step approach? I use the 1.272 first, and we may get the 1.618, or have you ever really tracked how often you get the one versus the other?
Yeah, the 1272 will be reached more often. There's a higher probability that you're going to get the 1272. The 1618, not as much. But like in this case, let's see, that high to that low. You can see where that, well, you can't see it because I have to force it to stay on there. So if I show the projections, you'll see that from this high to this low, we didn't have any reaction there, but we've put in the recent top at 1618 of that swing. So I do think it's higher probability that you're going to get the 1272. But you do want to look at both.
Right. You can't pass the one you can't reach the one without passing the other. So that's
Right, right.
But I think as you mentioned, a lot of your traders do like to use options. So I guess that probably does also come into play for them in terms of what strikes they're picking
yeah, and also
deciding.
sometimes they'll decide to like sell a credit spread or something rather than buy a debit spread. But I typically do either debit spreads or if it's inexpensive enough, like with TLT, that's an inexpensive option typically. So with that, then I would just do puts or calls.
That's a very good point. So in terms of, as you mentioned, you can go all the way down to a 1 to 2 minute chart, or you could be looking at the 15 to 30 minute for swing trade. Is there an average? Is there an average duration for, let's say, your swing trades, or that these setups you tend to find the sweet spot is? Is it a few days to a few weeks? Or?
Not that I know of. I mean, I haven't like said, well, most of these have lasted, this amount of time. I've never kind of looked at that. But I mean, there have been some that have lasted from, I mean, this was a decision way back when. This decision off of this support, this is the daily chart of Facebook, so far has lasted just 6 trading days. But typically what I'm looking for is I'd be looking for the target off of the setup. So off of this setup, this is my target. And we've fallen just short of it so far.
And I guess
I did want to,
oh,
sorry.
Please go ahead. Yeah.
I did, I think I posted this. I posted, well, the first chart, we broke the higher end of the support in Google, but then we had the second area, which, there was a cluster at 1280 to 1284. There was a single level at 1288.71. And if you look at Google, you'll see that we're above the 200, above the 50, and the 5 and 13 are still in a buy mode. So that we wanted to look at the buy side. So I had one trader tell me at the end of the day that, he took that Google, and what he did was he did it on a 1 minute chart. So he waited for a signal on a 1 minute and, knew his risk was under there and just, grabbed some money out of Google. Even though it was a daily setup zone, you're able to day trade against it.
And I guess if someone's so inclined, so you're isolating potential target regions. We got the 1.272, the 1.618, but really, yeah, I guess, and it's one of the beauties of trading. I mean, you could be scaling out at those, and you could be managing. It looks like you just manage a position, keep raising stops below recent swing.
Yeah, and just let the market take you out, because a lot of times it gives you a lot more.
Right. So if you want to try to get a runner, so it does look to be there's, again, and this is one of the things. So there's a method here, but then traders can decide to push and pull how they're so inclined and
yeah, because you could just use this 1 or 2 minute charts and day trade against any of the levels that I put out. If you don't want to swing trade and worry about taking it overnight and having some dumb tweet that comes out.
I don't know what you're talking about. So, one more, just kind of cleaning up some of the chart stuff. Could you go over the histogram? I know it wasn't on all the charts, but maybe just a
yeah.
intro of that.
All right, let me Okay, so I'll give you an example in Amazon. So this is a daily chart of Amazon. And what I have to do is tell the program which highs and lows I want it to, track to run the projections from. So it's like this high, this low, this high, this low, and this high. And what I did was I projected from this high, and this is how it looks. So I have to put my marker on this program. Okay, don't be messing with me here. Okay, front on that high, and then I project down for the next possible low. So I take, wherever we're at, like currently. So right before this low was made was when this was, okay, the 18th. So I go to reports, dynamic time projection, and I make a new report. And this is actually what's in there. It's just all the, ratios that I like, and I weight them a certain way. Like I'll weight 1618 higher and 100% higher. And for like an alternate time projection, I rate the 100% projection, even higher than that. And all of those, come together, and let's close this. And all I have to do is go forward to where we're at. Let's say Monday. Well, let's just do it Friday the 14th. So I'm going to click on the table and histogram, and it takes all of those, swing highs and swing lows and does the math. And here's all the cycles right here. And then it showed you potential for a low 16th, 18th. And I mean, it was a standout. So not only did you have the cycles with the histogram, now the histogram is calculated using calendar days. The outright cycles that I use, those are trading days. Now I do believe that the trading day cycles tend to be more accurate, but every once in a while I'll still, run a histogram on it also, just to confirm.
Perfect. And I believe this is touched upon, and we'll maybe try when we send out the recording to maybe link to these tools that you've already published. But just to go over really quickly, the daily chart, was it the 5 and the 13 exponentials that you used on those?
Yeah, on the daily chart, I have, but I am going to show you something in Apple too that's really cool. I always use the 200 and the 50 just to kind of look at the bigger picture, and then I use the 5 and 13. And the 5 and 13, as far as EMAs, and the other two are simple. But you got to check this out with the. Let's just get a blank chart of Apple, and I'm just going to put the 5 and 13 on it. So chart. Template. It could be very helpful in keeping you on the right side of the market. Now, it doesn't work with every single chart. You have to check out the chart and see if it has respected it or not. But check it out over here. Here you had the first crossover to the upside. You didn't have another crossover until here. Then you got another crossover to the upside, and didn't have another crossover until here, to get you out. Then it went back in a buy mode, and it's been in one ever since. So the 513 can be very helpful, in keeping you on the right side.
And on those intraday charts, it was the 8 and the 34 exponential that were the triggers. And again, people, Carolyn posted 3 PDFs, and we'll make sure those are available on the site now, and they'll be on when the service officially rolls out. We'll have that as kind of help intro material, and I'll see if we can also include a link to them to make it easier to find for you right now.
But you should also give them a link to my personal YouTube page.
Yeah, the video.
So my channel, I might be able to post it right in here. I mean, I can post it here and you can do what you want with it.
Yeah.
But that has my, the trigger entries.
Yeah, let me just see. And if I'm
gonna so there's a day trading plan in those videos, and there's the other one, how to use triggers. You want to look at that because that discusses both the intraday triggers and the swing trade triggers.
Yeah, so and just again for everyone, we'll be compiling a help intro page that will be part of the service, and it'll be something that everyone can access. And we'll try to get that out well in advance too, so that you can start going over these. But they are available as well on the site, including links to the videos. We just dropped a link to that page as well in the chat right here. So interesting, because you just talked about Apple and how it's respecting those crosses and how you need to look at if something is respecting that, say an example like that. So the question also is, have you noticed and do you tend to find that certain instruments respect symmetry more than others, and how do you track that, and how do you I guess plan for that?
Like with all the charts that I do, I don't have time to track anything, you know, but I mean, I notice things. But like, for example, crude oil is phenomenal with symmetry. I'm finding like with the overnight moves in the you know, gold and silver, not so much, doesn't work as well. But another one that does is the foreign exchange. You know, they have some beautiful trending patterns, and symmetry is often, you know, a major decision there. Like I had done that chart in the euro. I don't know if you saw that a couple weeks ago, but that was where, you know, you had some gorgeous symmetry and you had a very healthy reversal on that chart.
In terms of your charting, linear or log, what scale do you like to use?
I've never used the log. I mean, it's available on this program, but I never use it.
And then in terms of, so obviously you have, we see them right now too, timing. So in terms of, do you offer any advice or suggestions based on when people are using the analysis and options? Do you know how traders are maybe trying to decide, okay, which, obviously they got to pick the strikes, but also then how far out they go, or maybe how they time it based on, is there something that they can gain from the analysis to help them with that decision?
Yeah, I mean, typically, you know, you want to do, like, let's say if you do a spread, you're going to want to do, you know, the first part at, you know, maybe pretty much like at the money. But then as far as like for the other one to sell against it, consider where the target is. So for example, my target in, you know, if this low, because, you know, this could, I mean, if the indexes suffer more tomorrow, I mean, this could get blown away. But if we hold above it, target's at 1840. You know, so I would look at where the market is currently, and then also what is the expected target to help you formulate, you know, a spread that you might want to use. Maybe Facebook might be a better example. So here, when we had pulled back into support, and let's say it was trading right around here at the 190 area, let's say you could do 190 200 call spread, you know, because this was, you know, where we thought we might find resistance, you know, at the first target area. So that's the type of thing that I would look at.
No, that's a great example. And do you use pre and post market data for your individual stocks?
I don't use the overnight data or the pre-market. I don't. It makes the chart a mess. The only place where I do use it, which still makes messy charts, is in the futures.
Right.
But at least, you know, that's more active. It's not very active, and you see, you know, like really crappy looking charts when you try and include that on the stocks.
Do you use, so I think you answered this when you were looking at the S&P. So we saw a lot of examples of using symmetry for retracements, but you do also use it for potential, you know, targets to the upside.
Yes. So for example, I take a low to a high, and because many swings tend to be similar to other swings. So like that. So I'll use that for, you know, potential resistance. I mean, that's when you're just comparing swings in the same direction, but it's not within, you know, a correction within a trend, but it's a projection or you're just a comparison to the other prior swings, because you'll definitely find that those will be similar.
So besides moving averages, are there any other indicators or maybe oscillators that you like to look at?
Um, you know, I used to look at the CCI a long time ago, and it probably still has value. But I really just use, the setups and the triggers. And the way you make money with the work is setup plus trigger equals trade entry, and then you manage it. And the management includes, where is your initial stop going to be? Is it going to be under the low or under the cluster? And then managing it is going to include then how are you going to trail a stop if it moves in your favor. And then the third thing is where am I going to exit? Am I going to get out of partial positions at the 1272, or am I just going to use a trailing stop and let the market take me out? Those are the decisions that, those are the things you need to look at.
We could do this all night. I think you've gotten to the.
I haven't done my videos yet.
That's right. No,
I'm in trouble.
And so I think you've gotten to a bulk of a vast majority of the questions. I know we didn't get to all of them, and we'll certainly work with Carolyn to get other answers for you in the future. But I do also think I skipped around, and we'll also prominently showcase those if you haven't found already those PDFs that she's already provided. I do think some of those questions that are out there remaining will be answered in those guides and helping you actually look at the triggers and show examples of those. So Carolyn, I want to give you an opportunity for any final parting shots.
Well, I was just going to make one comment about this, the weekly chart in Apple, because I haven't seen it like this in a long time. I mean, Apple has already met the one major target off of that last swing, and the next targets would be like the 286, 290 area in the bigger picture. But I haven't seen the cycles come together from major swings like this in a while. High to high, 100%, the week ending November 29th. Another high to high, 1618, the week ending November 29th. High to high, 1272, the week ending November 29th. And then also this major low to low, 100%, the week ending November 29th. You really want to protect profits if you're in Apple, because what if these cycles kick in? And if they kick in, what if it gives you much more on the downside and you don't want to sit through it? So when I see stuff like that, mostly, even if it's like not up at a price relationship, I just tell people to trail up stops, because those are major swings, and there's the coincidence of 4 of them, and they're all lining up perfectly. So just wanted to give you a heads up in Apple.
Oh, that's fantastic. And this is something we're going to get to watch now going forward in real time, which is super exciting. But so I'm sorry, it begs it up. When do then you start to do your symmetry for the potential pullback? How do you make that decision of when you start to look now at what this could target to any potential downside move?
Oh, you mean like if we start to pull back? Well, then, I mean, I don't know if this high is going to remain intact. I mean, but you can already run it. I mean, you can say, well, maybe you get a correction like one of these, is that possible? Or maybe you just get one like these, these are the larger corrections that you're seeing on this time frame. What if we get a decline like this one? I mean, I don't think that's going to happen, but I mean, but that's how I'll start looking at, well, I'm going to look at maybe a pullback to here.
Right. That's fantastic.
And, I'd run some retracements too.
So there's a real-time look at then how it starts to play out and then generating the next batch of potential key clusters.
Yeah, and you have to remember that different time frames are going to give you different setups, because if you look at this, I'm saying, oh, well, I don't have a trade until it trades down here. Well, if you go to the lower time frame chart, you're going to see that you have a trade over here. Different time frames will give you different setups, and you have to decide what time frame setup you're going to trade and what time frame trigger you're going to use, depending on whether you're looking at it for a day trade or a swing trade.
As I mentioned at the beginning of the presentation, we're really anxiously awaiting and excited about the launch of Carolyn's Surface, which will be in early December, and we should have great details out about that very soon, hopefully by next week. So you just keep your eyes open for that. Carolyn, thank you so much for being with us here tonight, and for teaching us, for showing us what you do, and we're I know we're getting a lot of comments in the questions box, how much people are enjoying it. Someone shouting out the FXE trade that they were able to take on your Euro analysis, and there's been many other.
Oh, good. Yeah. Awesome.
So we're already starting to see the benefit, and we thank you very much. So
you're welcome. It kind of feels like home. It's just like a natural place for me to be, kind of. So it's I'm just throwing everything out there at this point, and I'll get a little bit more organized for when the December start. But I wanted to get in here and show people what I can do.
This is great. Well, thank you so much again. I hope you have a great evening.
You're welcome. Thanks. You too.